Look, you've put money into ESG funds because, on paper, they make sense. You want to back companies that actually do good, not just chase profits like every other fund on the market. But now, they're tanking. And you feel it. That gnawing frustration when your values investment starts looking like a straight up mistake. You're not just angry about the lost cash. You're pissed because you believed in something, and the market is laughing at it. You invested in a future that's supposed to be sustainable, and instead, you're watching it get crushed by volatility nobody warned you about. Here's the hard truth nobody wants to say. ESG funds aren't just struggling because of the market swings. They're struggling because most of what's called ESG is shallow, fragmented, and often outright greenwashing. They're trying to serve two masters at once, doing good while pretending to be as sexy and liquid as plain old indexes. It's like asking a Prius to win NASCAR. It's not built for that fight. So when real shocks hit, they fall apart. You're stuck with portfolio pieces that are either way overvalued or way behind the curve, and the volatility hits you harder than it hits everybody else. You need to stop fooling yourself that just checking boxes on ESG scores makes your investments future-proof. That's one huge reason these funds stumble right when you need them to hold steady. They're not aligned with what real, fast-moving market conditions demand. So what's the move? Cut through the noise and reroute your capital towards companies and funds that aren't just ESG buzzwords, but have clear, demonstrated operational excellence, resilient business models, and leadership that understands the stress tests of volatility like a surgeon. Find those who balance real environmental and social impact with rigorous financial discipline, not the hashtag-friendly PR. Also, don't get trapped waiting for big ESG indexes to catch up. It's a slow game, and slow doesn't win in this market. Go deeper into niche sectors where impact and innovation overlap with actual financial performance. Look for companies creating new materials, developing cleaner energy solutions that scale fast, or those fixing supply chains messy from decades of ignoring sustainability. This isn't about trendy labels anymore. It's about precision bets on what's actually moving the needle when the markets swing sideways or plunge. Here's another brutal tip. Don't be blind to governance. That's the part most investors skip. But governance failures hit hardest when uncertainty spikes. Real ESG includes governance that holds leadership accountable in crisis, not just fluff about board diversity or vague ethics statements. You want firms where the leadership's skin is in the game, where decision-making churns fast and effectively under pressure. Without that, ESG is a ticking time bomb in your portfolio. And lastly, embrace the mess. Market volatility isn't your enemy, ignoring it is. Use it as a filter, not a scare tactic. Volatility exposes weaknesses. It pulls away the veneer of greenwashed companies. That's your chance to clean house. Double down on investments where ESG isn't a sideshow, but baked into the operational DNA. Move capital fast. Rotate out of funds that ride on feelings and spin, and into those with real traction under pressure. If you don't do this, your ESG plays will keep suffering, and it won't be the market's fault. It'll be your fault for being lazy, for buying the hype, for waiting for easy solutions to complex problems. Don't just chase the good label, own the impact and the performance equally. That's how you protect your money, force the system to stop pretending, and create a portfolio that actually stands up when everything else falls apart. So ditch the noise, focus on real metrics, and start playing smart. Because nobody else will save your investments for you. Subscribe to our YouTube channel and open the featured link to learn more.